Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are on Thursday, February 1st. We're going to take a look at Peloton today. So Peloton had their earnings come out, and the reaction so far reasonably strong. We'll see if it gets stronger. So they beat sales estimates. It wasn't all good news though. It's been the story for a while with Peloton, but Peloton recorded a second quarter loss of 54 cents a share, which is in line with analysts' estimates according to FactSet, a narrower than loss per share of 98 cents a year ago. Revenue for the quarter was $743.6 million, above Wall Street expectations for $733 million, but a decline from last year's $793 million. So if you remember, I don't remember how many earnings ago it was, but there was basically this situation around like Peloton wasn't sure how to scale, and they were having a hard time getting a grip on, how they continue to grow, which obviously in our capitalist system, that's the name of the game. You either just grow forever or you eventually end up somewhat dead in the water. Peloton also reported 2.98 million paid connected fitness subscriptions for the quarter. Analysts surveyed by FactSet were expecting 2.99 million, so a little bit of a miss there. For the fiscal third quarter, Peloton said it expects to post revenue of $700 million to $725 million. That's below the consensus estimate for $749 million, drop from last year's $749 million. So shares were up, but basically flat when they put this out to 5.57. See, we're a bit below that for now. We're pushing toward $5 at the moment. We'll see if it gets there or not. Peloton stock has dropped 67% in the last 12 months. So this is very much a case of the stock price has been crushed over the last year, and still on earnings that are, I guess we could say, a little bit mixed, based on this headline at least. But, folks certainly digesting this in the realm of, we still don't trust it. Like, drawn down the price 67% over the last year, and still, based on this call, we don't necessarily feel like we should push it back up to any degree. Now, levels wise, as I have it on the chart here, we'll look at the daily and then we'll look at the intraday over here. But on the daily, if it does really dip, I have this 503 level and then this 431 level. 431, you see this like triple bottom here. I know it hit 428 there, but if it slips that 431 and really tests into the 420s, that might be kind of questionable in terms of what price point it could hold there and how. So that's why I have it at 431. I think that's sort of a better indication of where the buyers were sort of stepping in and where they would need to step in at the latest at this point to put in something like a quadruple bottom, which, again, I've said this before, but the more times you go to a certain price point and look for buyers to show up, at some point they might just not, because you might have exhausted all the buyers that were at that price point, and they're not really getting much for their investment, or maybe nothing for their investment. So at some point I get pretty questioning on whether buyers are going to continue to show up at a certain level. So we'll see what happens if it even gets down there. But 503 is basically that approach toward 5. Obviously, it's coming in from above 5. The question there becomes, is it really going to test 5? It's going to dip below 5. So I think that 503 is just that psychological approach to $5 level. Now, if it does push for whatever reason, or puts in some recovery points in the coming days or weeks, 668 would be a level that I'd look at. And then we have, ones that are a little pie in the sky feeling at the moment, but, maybe they'll come into play further down the line. 821, 990. There's certainly some levels in between these, because these are quite far apart, especially percentage wise. So I just tried to err on the side of not cluttering up the chart too much, to just keep in mind there's going to be some more granular levels in between those for sure. Now on the Think or Swim study here, I have this on the 10 minutes, so just be aware this is for intraday for today. These ATR levels are on the scalp setup. Yep, these are the scalp levels for intraday today on the 10-minute chart. So this one here has basically, level kicking off here at 511 is this puts level down to 493. So that gives us some indication of, where things may stretch. That's below the $5, right? That's if it slips it. If it comes up and it can get calls above 523, it has the +1 ATR at 541. So, percentage-wise, I know it's a big sort of range or a decent range, but, I was almost expecting something bigger. So we'll see how that plays out. Now, right now it's well outside of the histogram, outside of the channel, with the histogram showing bearish momentum continuing to pick up, though it's getting quite steep down there at the moment. And we did see a green candle come in here as it pushed off of that 495 low. So we'll see if it's able to get some motion working there or not, as it's situated here at the moment. Kind of taking a little bit of a breather, chilling, but like I said, it is quite far outside of the channel, and so at some point, I would wonder in what way is it going to interact, re-engage with the channel? Meaning, is it going to pull the channel down so far that the channel just eventually runs into the price, or can the price actually rise into the channel? Those are two very different things that sort of like indicate two very different current situations, either that like there's actually some reduction in the bearish momentum if it's able to rise and re-engage with the channel, or that there's probably more bearish momentum that is being exhausted or needs to be exhausted if it's pulling the channel down incessantly and is sort of re-engaging with it that way. So that'll be my question first, is how does it re-engage with the channel? And then when it does, of course, what does it do? I don't know if we have any decent examples here, but yeah, here was outside of the channel and it came back in and was able to press to the mid-range of the channel. So that's sort of an indication of showing some capability to at least push back. The bulls are showing some capability to push back and get into the channel. If it were to just do what it was doing here for a little bit, use the lower bound of the channel as resistance, or that red wave cloud as resistance, again, that can sort of indicate, maybe there's additional bearish momentum that needs to be exhausted here before the bulls can step in and sort of like get a little bit of buying pressure to push it the other way. So you saw that happen for several candles, exhausted. Finally, it did exhaust that bearish pressure, and when it came in, it was able to make the full run to the mid-range, which is eventually what we look for it to do. But who knows how long it takes, and sometimes on these intradays, it just doesn't get there. On the daily side of things, situated mid-range while it's been triggering hardcore on the TTM squeeze indicator. So I would expect the fire to either happen today, like the fire candle happen today, or in the coming days. And, there's a big move that's probably going to happen based on this. It's always interesting when you get the trigger with the price at the mid-range as it's heading into earnings. It can oftentimes just be a really good call out by the TTM squeeze indicator. So we'll see where that goes. All right, folks, I hope that you have had a good trading week so far. And as always, I appreciate you watching, and I will see you in the next video.